Now we'll go through the steps in performing a simple bank reconciliation and the associated journal entries. How to perform a bank reconciliation. What are the journal entries necessary to adjust the cash book balance? Recall that the difference between book and bank cash balances are the result of timing difference and/or errors. Now we'll walk through typical items that you would run across during the bank reconciliation process. The bank balance comes from the bank statement. The book balance comes from cash account in the general ledger. Now we need to consider timing differences. A deposit in transit is a deposit the company has made that is not yet reflected on the bank statement. In this case, Silver's Gem deposited $1,200, which was not represented on the statement. Therefore, this amount needs to be added to the bank balance. Outstanding checks have been recorded by the company, but the bank has not yet paid them. These need to be subtracted from the bank balance, as they represent cash funds already committed to pay vendors. When we inspected the bank statement, we noticed that a wire transfer from a customer was received by the bank, which we had not yet recorded. Therefore, this increase in cash must be added to the book balance. Also, our bank account earned interest this month, which was indicated by a credit on the bank statement. This receipt of cash also needs to be added to the book balance. Further inspection of the statement revealed that we incurred bank service charges of $25, which we had not yet recorded on our books. This is a decrease in cash from the book perspective. Also, a customer bounced a check, which was reflected as an NSF charge on the bank statement, which reduced cash available on the bank's records. We must deduct the amount of the bank check from our cash book balance. Notice that when we have processed all the adjustments to the book and bank balances, that the adjusted balances should be equal. If they are not, then there must be an error or additional timing differences that were overlooked. Upon completing the bank reconciliation, it is now necessary for Silver's Gem to record the changes outlined on the bank reconciliation in the general journal. We can only make entries that affect the book balance, as we do not have control over the bank's books. However, if we noticed any errors that the bank made, we would notify the bank so that the bank's accountant can correct them. Timing issues on the bank's records are self-correcting, meaning that over time, they will be reflected on the bank's records. The entries to adjust the books are very simple. Any additions to cash on the bank reconciliation require a debit to cash, and subtractions to cash obviously require a credit to cash. The other accounts in these entries are dependent upon the nature of the adjustments. The funds transfer of $1,300 that we didn't know about until we reviewed the bank statement represents a payment from a customer for services. Therefore, the corresponding account to credit is fees earned, or revenue. Interest earned also represents income. Since Mr. Smith bounced a check that he used to pay for his membership fees, he still owes us the money. Therefore, we debit a receivable to reflect our claim against Mr. Smith. The bank fees obviously represent an expense. When adjusting entries are posted to the cash account, the ending balance of the cash account should be equal to the adjusted book balance on the bank reconciliation. This balance is now reflected on the balance sheet.